Good morning, everybody. Welcome to the Seiler Wealth Management video blog. Today is Thursday, February 11th, and thank you for joining me. And yes, the markets have been still under some pressure, and we have attempted some rallies late in the day and have succeeded a few of these days. But it's very ironic that you have Bernie Sanders win New Hampshire, and the markets really can't find a bid. And what I mean by finding a bid, just can't find any kind of stabilization at all. And the bottom line is, and I don't usually like to speak politically on here because you're going to offend one side or the other, and I'm certainly not going to give my opinion on what side or who I'm going to vote for. But what I will say is this. Most people that are watching this video are not going to vote for Bernie Sanders. I guess I can offend them. So Bernie Sanders, you saw in the results, and I study these things. I watch every single debate from start to finish on both sides, Republican and Democrat sides. But 85% of 30 and unders voted for Bernie Sanders. It's because they don't understand. And again, I don't care if I'm offending the millennials, because I will tell you I have exactly 0 millennial clients. I really don't care. Yes, will they have money sometime? Sure. My kids are going to inherit some money, okay? However, today they look for what can they do for me. Me, I'm of the mode where I'm going to pay my taxes, I'm going to pay my fair share and help the people that need to be helped. But you can't help everybody. And that's where Bernie Sanders, where his philosophy is wrong. You can't do everything for everybody. You can't give everybody health care for free. You can't give everybody a free college education. Bottom line is, you don't want everybody to have free college educations. College is used to be for the elite. Now everybody, really the norm is a bachelor's degree. But there are trade schools. There are a lot of other things that can be done and make a good living at. All right? I know a lot of people, and I've got a lot of clients that have worked some factory-type jobs, and they worked at a company for 30 years, have a fantastic pension, which is a thing of the past. You don't see a lot of that. And they have $600,000 in their 401k. So there's a lot to be said about sticking with a job for a long time. All right. That's my political soapbox. Done. I'm getting off of it right now. Let's talk about what I mentioned on Tuesday. In my Tuesday blog, I talked about buybacks and how important that is to the market, because it does give some support down there. Well, it was announced yesterday that Amazon, which is part of the FANG stock, remember FANG, the acronym F-A-N-G, it's the A part, Amazon, they have announced they're going to buy back $5 billion worth of their own stock. Okay, we're going to see that from a lot of companies, especially the cash-rich companies, which those FANG stocks are. Now, Amazon has not been acting really well, but nothing has. I have to tell you, what we're seeing here, and this week especially, Janet Yellen is speaking. She's really keeping it, I'm going to call it, and it's not the tone of her voice, but very monotone. She's not going one way or the other. She is not giving us any clarity as to whether the Fed is going to skip the interest rate hike in March, because it was a foregone conclusion after the interest rate hike they did in December that, you know what, we're going to, every other meeting, we'll have 4 interest rate hikes pretty much this year, starting in March. Well, obviously, things have changed drastically in the last month, especially in the markets. And the bottom line is, when the stock market goes down like it has, 10, 15%, people feel less wealthy. I don't care if you have $20,000 in your 401k or your IRA, or if you have $2 million in your 401k or your IRA, you feel a lot less rich. So you tend to not make those big purchases. Well, that would slow the economy down. So I think that has changed. Obviously, China, you're seeing the slowdown. We knew that was going to happen. But the bottom line is what you got to look for. There's been a lot of companies out there that have reported phenomenal earnings. And so what I look for is I look for the companies that have come out with great earnings and sales, have terrific guidance going forward. They say things are going to be okay, and their stock price is down only because it's part of the stock market. Okay, because the stock market, what you all need to understand, I don't care which stock it is, the stock market is a risk investment. It's been a good risk investment over time, and averaging 9% a year for the life of the stock market. But you really shouldn't be in the stock market if you're a very short-term investor. You need to be more long-term. And long-term, many people have different definitions, but you got to have years left before you retire, not months, okay? So I'm looking for the companies. I'm going to give you a couple ideas, and these are by no means recommendations, okay? Because I don't know your personal situation. I'm not sure you can go out there and buy a Google today. But I'm going to tell you, Google just absolutely beat the snot out of earnings, revenue, and their guidance was fantastic. Don't let, if you qualify and you feel it's suitable, and please discuss it with somebody, talk to your advisor, call us, we can tell you if you're suitable for it. But Google's a volatile stock, no doubt about it. And I hate to call it Alphabet because that's the real name, okay? Stock, I mean, it is just, it's really become a pretty good value down here in below $700 a share. And I think that when all this passes, and this will all pass, okay? I'm just telling you, I've been doing this 27 years, it does pass. So you can't be thinking, oh, don't look at your statement. If it really makes you that sick, don't look at your statement. But Google had a fantastic quarter. I have to tell you, I'm not disappointed in the Apple quarter. They beat on earnings. I mean, they had a couple things that were sticking out, but take a look at Apple stock over the last couple of weeks. It hasn't budged. It's hung in there between 94 and 96. I think that is trying to find a bottom down here, and with the dividends they pay, and with the products coming out later this year, that could be a great opportunity. By the way, I just want to disclose, we do on Google for some clients, and we do on a lot of Apple, okay? Now, another company, J&J, Johnson & Johnson came out with a fantastic quarter. That is I would call it more of a conservative, old school Dow Jones stock that pays a little bit of a dividend and is well diverse. And if they're in the cards somewhere, there may be a breakup of the company in their different divisions, drugs and healthcare equipment and products and so forth. If that happens, it could unlock a tremendous amount of value. So again, that's something you can take a look at. But the bottom line is, and actually with FANG, I'm going to tell you right now, Facebook, another one, had tremendous earnings, stock rallied up $15 after earnings, and has pulled back a little bit since then. Could be a great opportunity. I like the FANG stocks, but instead of Amazon, I'm plugging Apple in, okay? Facebook, Apple, Netflix, and Google. Netflix is one I'm not so sure about. I like the company, and I think they're doing great things, and they need a couple of more hit shows to come out, but I think they're going to be okay. I also want to address a local company here that reported earnings Tuesday, and that was Disney. Disney absolutely knocked the cover off the ball. They're doing everything right, yet the stock goes down. Here's what the concern is. ESPN, which is realistically a small part of the whole Disney package. Okay, their theme parks are doing well. We know about their movies and Star Wars. And yes, were they losing subscribers to ESPN because, those 30 and unders, they're getting rid of their cable and they're doing everything online. Okay, another reason why I dislike them. Okay, and I have two millennials. I like them okay, but anyway. So that has been a little bit of a concern, but Bob Iger, who I believe is one of the premier CEOs in the world, said, hey, we're seeing a tick up in our ESPN subscribership again, and they see that continuing. So what more does he have to say? That is a tremendous stock, and I'm telling you right now, the stock hit $130 last year, and now trading at $90 could be a great opportunity as well. So the markets are irrational. That's what happens, okay? They get really irrational. The pendulum swings both ways. When the market's really, really hot, things are just going crazy. You don't need a reason for them to go up. When the market's really cold, like it is right now, you don't need reasons for them to go down. They're just going to go down because of lack of buyers. All right. Thank you for sharing my video. You guys have been awesome. Share the video. Like our Facebook. Also on the website, you'll see some different things. And what we've done now is we have appointment days for new clients coming in on Tuesdays and Thursdays. We can't do them Mondays and Wednesdays. It's just we're too busy with our existing clients. So if you want to, please call and be patient with us. We'll get you in on a Tuesday or a Thursday. Call the office, private message me. But let's go ahead and give some cruises away. All right, I'm going to I'll give two away. Let me go into my green. What I've done is if you share my video, you have two entries. If you like our video or the Facebook, you get one. All right, so the winner, first one, Jan H. I'm not going to give your last name, but I will track you down. You want to cruise for two to the Bahamas. It only costs you port fees, which are about $70 a person, but it's worth about $120, $140, something like that. All right, the next winner is, all right, Bill D. Bill D. I will contact Bill D as well. Winner, Jan H. and Bill D. Thanks for playing. Share my video. Check out all the other services we offer. If you need any help, if you want to see if one of these stocks are suitable for you, please contact us because not all things are suitable to all people. I was meeting yesterday with a client of mine. He's been with me for 16, 17 years, and he's 88 years old. God bless him. The guy is in incredible shape. So may not be suitable for him. Okay? Everybody have a great day and have a fantastic weekend. Thanks.